Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. So we meet again. Today we are talking about chapter 5, statement of financial position and statement of cash flow. So this is the table of content for today's topic. The first one is explain the uses, limitation, and content of the statement of financial position. And the second one is prepare a classified statement of financial position. That one is explain the purpose, content, and preparation of the statement of cash flow. And the fourth one, describe additional types of information presented by my friend.
So I'm going to explain about usefulness of the statement of financial position. First one is liquidity. Liquidity refers to the time expected to elapse until an asset converts to cash or a liability is paid. Second is solvency. Solvency is the company's ability to pay its debt as they mature. Next is liquidity and solvency combined, and then it's gonna be a company's financial flexibility, which is its ability to alter cash flow to respond to unexpected needs and investment opportunities. Next is limitation of the statement of financial position. First is historical cost valuation. Most assets and liabilities are reported at historical cost rather than fair value. For example, if a company owns crude oil that appreciates in value, the increase is typically only reported if and when the asset is sold. Second is reliance on judgment and estimate. Companies must estimate many of the reported items. This includes estimating the collectability of receivable, the useful life of property, or the number of items that will be returned under warranty. Third is omits many items that are of financial value. The statement necessarily omits items of significant financial value that cannot be objectively recorded. For example, a company's customer base, research superiority, reputation, and the knowledge of its employee are not recognized on the balance sheets, but additionally, many liability may be reported off balance sheets. Next is content of the statement of financial position. The statement of financial position reports a business enterprise financial condition at a specific date. The three general classes of items included are asset, liabilities, and equity. Asset is a present economic resource controlled by the entity as a result of past events. Liability is a present obligation of the entity to transfer an economic resource as a result of past events. Equity is the residual interest in the entity's asset after deducting all its liability. After we know about the three general classes in the financial statement, we're gonna subdivide the three of them based on characteristic like liquidity and expected function. That we subdivide with two, there is asset and equity and liability. Asset categorized into non-current assets such as long-term investment like property, plant, and equipment, and intangible assets, and current assets. The equity and liability categorized into equity, for example, like share capital, share premium, retained earning, accumulated other comprehensive income, non-controlling interest, and non-current liabilities, and then current liabilities. This is the example of financial position classification. Next is gonna be explained by my friend.
So the next one is preparation of the statement of financial position. So first, we have to talk about the account form. So in general, companies use their account form on the report form to present the statement of financial position information. The account form lists asset by section on the left side and equity and liabilities on the section on the right side. The main disadvantage is the need for sufficient white space in which to present the item side by side. Often the account form requires two facing page. So we'll move to the report form will be presented by my partner.
In here, I want to present it about report form. As you can see in the picture, report form is the list item by the categorized. The first categorized is non-current asset. There are long-term foundation like land, building, and intangible goodwill. For the scientific product, this total is 947,100. And below that is current assets. Follow immediately below. These are your near cash item like inventory and account receivable. The total is 454. By stacking this vertically, we arrive at our first major milestone, total assets of 1,700,220,554. We move to the next page. This session is titled by equity sebelumnya. Equity and liabilities. Equity is listed first. In this specific example, it shows the owners take share capital, retained earning, and treasury shares totaling 900,082. The next is non-current liabilities, showing long-term debt like bonds. And the last one is current liabilities, detailing short-term obligation like account payable and wage.
Now we are going to talk about the purpose, content, flows. First, the purpose. The statement how cash was used, the change in cash during the period. The main goal is to provide a detailed picture of a company's financial health by showing that where the cash comes from, how, and what, and it helps stakeholders. Next, the content of the statement of cash flow. The statement is divided into three distinct categories of activities, such as operating activities, where cash from the core business, such as receipts from customer and payments for inventory, wages, and taxes. And then this section can be prepared using direct method and indirect method. Next. After the operating activities, there is also investing activities. Cash flows related to buying and selling long-term assets or purchase equipment, sale of equipment, and purchase or sale of investment. Cash-related cash movement between the company and its owner, including issuing stock, taking out loans, repaying debt, and paying dividends. And next, third, financing activities. So the finance credit and cash flows related and owner financing, issuing shares or borrowing money, repaying loans or paying dividend. And the last one, preparation of the statement cash flows.
Okay, Nayla, kamannya gimana?
Kenapa?
Kamannya gimana?
Aman.
Aman. Oke, oke.
Aman.
Continue.
Nge-lag keluar sendiri.
I should start from where?
Continue from the start. From the apa sih?
Slide. For this slide.
Yeah, from this slide.
Okay.
Sorry.
For the third one, the financing activities, it's cash flows related to borrowing and owner financing, issuing shares, borrowing monies, or repaying loans or paying dividends. That means that in financing activities, cash movement between the company and its owners or creditors, or including issuing stock, taking out loans, repaying debt, and paying dividends. And the last one, preparation of the statement of cash flows. It determines the change in cash during the period, classifying cash flows. First, calculate the operating, and then cash flow, calculate investing cash flow, calculate financing cash flow, and reconcile. The next part will be next. By my.
Okay, now I'm going to explain about additional type of information provided. The first one, we have notes to the financial statement. Notes are the primary vehicle for providing additional detail and are the extensive under IFRS, often exceeding 20 pages for a large company. They cover such like accounting policies. What is accounting policies? It's like a disclosure of the specific method used to value asset and liabilities. Then the second one, we have maturity analysis. This is a detailed breakdown of financial liabilities by payment date to help user assess liquidity. Then the third one is roll forward schedule. This is the reconciliation that tracks change in balance, like property, equipment, or intangible asset from the beginning to the end of the year. And the fourth one, we have contingencies and commitment. This is like disclosure of uncertainties, contract, and agreement that may affect the company's future financial condition. Next slide, please. Then, second one is technique of disclosure. Companies use several methods within the financial statement to provide clarity without cluttering the main reports. First one, we have parenthetical explanation. This is the additional information placed in brackets immediately following an item, such as like the number of the share authorized or issued. Then the second one, we have cross-reference and control items. This is link-related item in different parts of the statement, showing accounts that reduce primary account. For example, like accumulated depreciation for fixed assets. The next, please. Okay, the last one, we have supplemental information and guidelines. First, we have off-balance sheet information. This is essential for evaluating long-term and short-term loans, as it reveals obligation not captured in the main statement of financial position. Second one, we have fair value and intangible. While not always recognized on the balance sheet, companies may provide additional information about the fair value of equipment or internally generated intangible, like customer list or... Okay, now we move into the last part, supplemental information and guidelines. The first one, we have off-balance sheet information. It is essential for evaluating long-term and short-term loans, as it reveals obligation not captured in the main statement of financial position. Second one, we have fair value and intangible. While not always recognized on the balance sheet, companies might not provide additional information about the fair value of equipment or internally generated intangible like customer list to assist creditor and investor. And the last one, we have comparative information. This is a reporting data for both the current and prior years to allow for trend analysis. Okay, next. Maybe that's all presentation for today. Thank you for hearing our presentation. We are sorry if we make any mistake during explain the material. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.